Hey everyone, welcome to FinStop, a one-stop solution for all your finances. A quick disclaimer before we start, this is not a stock buy or sell recommendation. Please do your own research before investing. Today I will discuss about Yes Bank, one of the favorite stock for retailers. Yes Bank, if we see, it has gone down from 380, 400 levels to around 20, 26, 28 rupees. So we'll see the stock from two perspectives. Let's see what most of the retailers or the new investors from their angle. So from their angle, if we see, it has gone down by almost 90% from its all-time high, and it is at very cheap valuation. So let's see first the profit and loss statement for the years. If we see from March 2013 we have till March 2024, the profit was going up till 2018 and then it started to go down. Okay, here was the highest loss the bank has incurred, and after that it has started improving itself. So from there you can see minus 3500 and then it has gone up. I mean, it has turned into profit, and now it is around 1300 crores profit. Now let's go to the quarterly result. So we have from March 2021 to March 2024. In March 2021, there was a net loss of 3,700 crore. The gross NPA was 15% and net NPA was around 6%. From there, if you see, it has consistently gone down. NPAs consistently, both the NPA, gross NPA and net NPA has gone down, and right now it is in good levels, 1.7% gross NPA and 0.6% net NPA. No one can say these NPAs numbers are bad. These are very good actually. So from a retailer's perspective, a new investor perspective, it is a good state right now. It has improved its performance, the profitability, the asset quality has improved, and the stock is available at almost 90% discount. So from that angle, it is a good to buy. Right? Now let's see another perspective. So we have max chart of Yes Bank. We'll analyze what happened between 2018 and 2024. So we'll compare financial year basis. So we'll see around what happened during March 2018. So we'll take the stock price that time. So at March 305, and in 2024 March it is around 23 rupees, right? So stock price is 305 and currently it is at 23 rupees approximately. The profit after tax in March 2018 is 4233 crores and currently it is at 1285 crores. So 4233 and 1285. The EPS, if we see, it was 18.38 and 0.45. 0.38, 0.45. Now we'll try to figure out the number of shares. So what is number of shares actually? This PAT we have and EPS we have. So EPS is generally PAT divided by number of shares. Now if you want to calculate number of shares, it is simply PAT divided by EPS. So if you divided 4233 by 18.38, you will get around 230 crore, and here it will come 2855 crore. You can see a clear jump of 12 times. If you see the PE ratio, in 2018 it was 16.6 and in 2024 March it is at 52. Now let's try to analyze from a market cap perspective. So market cap is equal to number of shares into stock price. If you see, number of shares has gone up by 12 times. And stock price, if you see, earlier it was 305 and now it is 23. So it has also gone down by around 12 to 13 times. So if you see market cap, it remains same because stock price has gone down by 12 times, number of shares has gone up by 12 times. The reason I am saying this, because the discount you see in the stock price currently, that is from 380 rupees to 26 rupees, is compensated by the increase in number of shares. So it is not actually a undervalued stock as per market cap. Only if you see stock price, it is undervalued, but stock price has nothing to do with valuation actually. In that case, there are multiple stock split, stock bonuses where stock prices are slashed down by 5 times, 10 times. You can say those are undervalued, right? So stock price is not a justification for any company, any organization to be undervalued or overvalued. We have to see other parameters. Now let's see the PE ratio. So PE ratio, if we want to see in 2018, let's see, the PE ratio was at 10-12 at this point, 10-12. Currently, what is the PE ratio? Currently it is 53. It has gone up till 85 also at some time. Now it is at 53. Now let's see its peer PE ratios. If we see all these private banks, the PE ratio of all other banks is less than 20. It is nearby 20 only. However, Yes Bank currently it is trading at 64 PE ratio, which is very much higher than the others. The Bank Nifty PE ratio is around 16 to 17 currently. So you can see it's clearly overvalued in terms of PE ratio at current prices. So the thought process what we have previously based on the stock price, that the current stock price is heavily discounted from its all-time high and the bank is also performing good in recent days. So that's why it is a good bet. So from valuation perspective, it is not at all undervalued. Now whether we should sell the stock if we have, or we should buy it, we'll discuss that. So first thing about any bank is, or any organization, it is the management. So currently Yes Bank CEO is Mr. Prashant Kumar. He brings a lot of value to the management actually. He has managed a bank like SBI, such a large bank, as CFO and Deputy Managing Director. So his experience will bring a lot of value to the bank, and we can see that from the quarterly performance also. So in March 2021, as I discussed, the NPAs were high. The profit, there was no profit actually. There was a loss of 3,700 crores. From that, it has consistently improved. Consistently, the NPAs, the asset quality has consistently improved. The net profit, however, it has improved, but in between you can see there is a fall. It happens when a bank goes through a bad phase and then it tries to recover. It happens, but it has not gone in the losses actually. But after that it has gone up, and currently it has a profit of 467 crore in a quarter, which is highest after the 2018 crash. So from that angle, it is a good state to buy. The NPAs are good. If you see any private good banks, you can see NPAs like this only. The management is good. Only concern is the valuation, which is currently very much high compared to Bank Nifty as well as other banks also. Let's see the shareholding pattern also. Currently FII are holding 28%, DII holding is 38%, government is negligible, and public is holding 33%. So you can see the holding is in strong hands, FII and DII. So there is a catch actually. What you can see, all the banks you can see in the list: State Bank, then we have HDFC, ICICI, Axis, Kotak, Bandhan, IDFC First Bank. So what happened during the crash? RBI came into the picture and it tries to save the bank. Actually, if it happens with any bank, it will do the same. And RBI has asked these banks to save Yes Bank. That's why you can see State Bank has holdings of around 30% for last few years. There is a lock-in period also. After the lock-in period ended, it diluted its stake and currently it is at 24%. HDFC Bank also holds around 3%. ICICI holds 2.4%. So it is in strong hands right now because RBI backing, but in future they may dilute their stake. But if the bank is performing good, we can see the banks and other institutions also, they are increasing their holdings. So it all depends on the future performance of the bank, how it is doing, how it is managing its asset quality, and how it is managing its profitability. Based on that, the stock will perform. But currently it is little bit overvalued from other banks as well as Bank Nifty. However, if you believe on the management, if you believe on the bank, then it's a good bet to buy and it can generate a lot of wealth for you. The only reason I am making this video is because you can take an informed decision from this, and you don't buy a stock based on the thought that it is deeply discounted, it is currently undervalued and it will go up to 400 or 100 at least, based on the stock price discount. Because you can see many videos are there, those who are saying that it will go to 100, 200, 300 because it is currently performing good. It is in higher valuation that previously it was in 2018 or so. Only the stock price is down, rest all valuations are same as previous, or we can say overvalued if we compare with PE and profitability. So that's all. Thanks everyone for watching. If you like the content, please do like, share and subscribe.